The world of finance is undergoing the most profound transformation since the invention of paper money. By 2030, the concept of money itself will be radically different, decentralized, intelligent, and seamlessly integrated into the digital fabric of everyday life. Digital currencies and artificial intelligence are not merely technological innovations. They are reshaping the very foundations of global economic power. In less than 2 decades, blockchain technology has evolved from a fringe experiment to a cornerstone of modern finance. Bitcoin's arrival in 2009 was born from rebellion, a decentralized alternative to the established banking order. What began as a movement for financial freedom has matured into a catalyst for systemic change. Today, nations, financial institutions, and technology giants are racing to harness digital currencies not only as assets, but as tools for efficiency, transparency, and control. The emergence of central bank digital currencies, or CBDCs, represents the next frontier in this revolution. Over 130 countries, accounting for nearly the entire global economy, are exploring or testing government-backed digital currencies. These innovations promise faster transactions, lower costs, and reduced reliance on intermediaries. Yet beyond convenience lies something far more transformative: the ability for governments to gain unprecedented insight and control over financial flows. China's digital yuan is already operating at scale, and the European Central Bank and the U.S. Federal Reserve are developing their own digital ecosystems. By 2030, these systems could redefine how nations conduct trade, distribute welfare, and implement monetary policy. But digitalization is only half of the story. Artificial intelligence is rapidly becoming the invisible force driving this transformation from behind the scenes. AI systems are now capable of analyzing financial data, detecting fraud, personalizing investment strategies, and predicting market trends in real time. In the coming years, the financial world will evolve into a self-learning ecosystem where AI platforms autonomously execute trades, approve loans, and manage risk with precision beyond human capability. The convergence of AI and digital currencies is giving birth to what can only be described as programmable money, a new class of intelligent currency that can follow rules, execute contracts, and ensure compliance automatically. Imagine a world where a business transaction instantly allocates tax payments to the government without paperwork, or where social benefits are distributed through digital wallets that can only be spent on essentials, ensuring accountability. Charities could send funds directly to recipients in remote regions, traceable and transparent, eliminating the risk of corruption. The implications for efficiency, fairness, and inclusion are extraordinary. Billions of people currently excluded from traditional banking systems could gain access to digital wallets through nothing more than a smartphone. With blockchain providing security and AI managing risk, the barriers that once separated the developed and developing worlds may finally begin to erode. Yet, this transition is not without peril. As money becomes digital and intelligent, questions of privacy, regulation, and sovereignty rise to the surface. Governments see in CBDCs not just economic tools, but instruments of control, capable of monitoring every transaction. Corporations, on the other hand, view data as the new currency, using AI to anticipate and influence consumer behavior. The balance between innovation and oversight will determine whether this revolution liberates individuals or binds them to a new digital order. Traditional banking institutions are already feeling the tremors. For centuries, banks have acted as intermediaries, managing deposits, issuing credit, and facilitating transactions. That structure is now being dismantled by decentralized finance, or DeFi, a system powered by blockchain that allows people to lend, borrow, and trade without banks. These platforms operate through smart contracts, which execute automatically without human intervention. The result is a financial system that is more transparent, efficient, and democratic, but also one that threatens to make many traditional roles obsolete. Major banks are racing to adapt. Giants like JP Morgan Chase and HSBC are investing heavily in blockchain infrastructure and AI systems to remain relevant. JP Morgan's blockchain-based network already processes billions of dollars in tokenized transactions daily, while machine learning algorithms now handle fraud detection, compliance, and investment analytics at scales once unimaginable. Still, the deeper disruption lies in the nature of trust itself. Historically, people trusted banks and governments to protect their wealth. But as digital ledgers and algorithms prove more reliable, trust is shifting away from institutions toward technology. This redefinition of confidence will shape the geopolitical and economic balance of the century. AI's dominance in financial decision-making brings both precision and risk. Machine learning systems already control the majority of equity trades, executing them in microseconds. By 2030, trading floors may be replaced entirely by autonomous agents capable of processing terabytes of global data without fatigue or emotion. Such precision could stabilize markets, or trigger catastrophic collapses if algorithms malfunction or are exploited. The same technologies that promise efficiency also create new forms of systemic vulnerability. Global trade will also evolve under this transformation. Cross-border payments that once took days will occur in seconds, bypassing costly intermediaries. Supply chains will become fully transparent, with every transaction traceable from origin to destination. For small businesses and developing nations, this could unlock trillions in potential growth. Yet, the same transparency that empowers also enables surveillance. Governments could track citizen spending in real time, raising fears of digital authoritarianism. As this new financial order emerges, regulation and ethics will become the ultimate tests of human foresight. Traditional monetary systems were built on borders, laws, and human oversight. Digital finance transcends all three. Cryptocurrencies and decentralized protocols do not belong to any nation. They exist everywhere and nowhere at once. This poses a profound dilemma for policymakers struggling to maintain stability without stifling innovation. At the same time, AI's reliance on vast amounts of personal data raises urgent questions about fairness, bias, and ownership. In this system, every transaction, preference, and decision becomes part of a digital identity. Who controls that identity? The individual, the state, or the corporation, will define the ethics of future finance. By 2030, central bank digital currencies, private cryptocurrencies, and AI-driven investment systems will coexist in a vast, interconnected web of digital value. Traditional banks may evolve into data custodians rather than money managers, while individuals wield programmable wallets that interact directly with global markets. The efficiency will be unmatched, but so will the complexity. A single algorithmic failure could disrupt entire economies. A single act of manipulation could distort markets across continents. Ultimately, the future of money is not just about technology, it is about trust. The world is moving toward a financial ecosystem where code and currency merge, where intelligence replaces intermediaries, and where transparency challenges privacy. Whether this evolution leads to empowerment or control depends on the values humanity chooses to embed in its digital systems. What is certain, however, is that the transformation is irreversible. The financial world of tomorrow will be intelligent, instantaneous, and interconnected, a living system where money thinks, learns, and moves as fast as the world itself.